Justin Holland here with the Mad Insurance Show, making a difference in insurance. You're listening to episode 27, actually, of all the shows we've been doing on the Mad Insurance Show. And we're so glad that you're here. Now, you might be listening to us on the radio here locally on KTSA. So welcome and thank you for joining us. And hopefully we'll give you some insight and some value over the next, 50, 60 minutes. Or you might be looking at us or watching us on YouTube or one of our clips online. Just as a reminder, our YouTube channel is youtube.com/Mad Insurance Show. So if you got a minute to be able to take a look at that, we'd love to have you like and follow our YouTube channel. And again, that's going to be youtube.com/at Mad Insurance Show when you've got a moment to be able to take a look at that. So without further ado, I typically, give you a little background on us and the companies and how we service the San Antonio and South Texas area. And then I'm going to basically go over today a lot of updates and articles that I want to spend another show on just to get some awareness on what's going on there out in the industry right now. We probably won't focus on auto and home insurance right now. We're going to focus, again, the headlines have typically been health insurance. So we're probably focus on those. But I think this is going to be some insightful details on this show, and hopefully you get something out of it. So, again, thank you for joining us. I'm Justin Holland. I'm based here in San Antonio. I have a local brokerage here in San Antonio. Actually, I've got two agencies. Texas State Insurance Services is basically an agency where we focus on health insurance, Medicare plans for seniors, individual health coverage options when people need alternatives for maybe some higher cost insurance they might have in place, dental, vision, travel, all of that. Texas State Insurance Services focuses on that, along with employee benefits. We help out quite a few small, medium, and large size companies with their employee benefits and a review there. So if you manage the insurance for a company or you need just another second look and want to make sure you're keeping everybody honest, reach out to us. The phone number for Texas State Insurance Services is 210-880-5316, or you can visit us online at txstateinsurance.com and you can complete a contact form and we'll be reaching out to you pretty quickly and seeing what we can do to size up your situation. The other agency we have is Palmetto Life Group. I created Palmetto Life Group as a separate agency for life insurance, for Social Security analysis when that applies for your retirement. I think a lot of people need that assessment, and I am a registered Social Security analyst. There's only about 4 or 5 of us here in San Antonio, South Texas, so it's been of great value to our clients to size up their Social Security benefits as well with an analysis there. But long-term care planning is also where Palmetto Life Group shines and helps out, as well as auto, home, and commercial lines of business. So we're just finally starting to grow the auto, home, and commercial lines, whole nother segment of the business and industry. But we've implemented some really cool tools to size up options and plans for everybody. So if you're needing any help with those types of insurance options, reach out to us at Palmetto Life Group. The phone number is 877-357-5316. Or you can, again, Google us or find us online at palmettolifegroup.com. Complete a contact form, and we can absolutely take a look at all the options for you. Really excited about both the growth of both agencies. We try to be as on hands as possible. Yeah, a lot of times you're going to be dealing directly with me, or I'm going to have my hand in the complete review for y'all. And then we want to play the long game. We want to be your agency of choice for many years to come, and hopefully we have an opportunity to take care of family, friends, and loved ones as well with insurance options. So all I can ask is keep us in mind for that. I created the Mad Insurance Show basically just to talk about everything insurance. We've had guests on the show. We've got guests coming on the show in the coming weeks from insurance companies, that we do business with and offer to our value clients, as well as providers or industry experts. So we've got more of that coming, and hopefully stay tuned or visit us online on our YouTube channel. to just check up some of the past episodes and some of the clips that are out there on some, pretty good important details that you need to consider. So that's enough yapping about the agency and the show. Let's dive in to what I've got prepared for the show. And let's see here. What I have for the first article that I want to bring up and review for a few minutes here is Social Security. Okay. Came across an article. This was sourced out of Yahoo Finance and AOL Money. And basically, it was regarding Social Security. A lot of people are reaching out to us and needing our assistance regarding Social Security because you basically qualify for it when you turn 62. Now, granted, you've got to have credits and everything in line to be able to access that. But a lot of individuals say, "Hey, do I take it at 62? Do I wait till 65? Do I wait for my full retirement age at 67?" Let's dive in to some details regarding Social Security and see if this resonates with you. What we are trying to do with our Palmetto Life Group division is probably try to visit with people when they're, age 60. Let's get a game plan in place, an assessment of what your options would look like for your Social Security drawing at 62 or later. And this doesn't just apply for yourself. This can apply for your spouse and whatever survivorship benefit you want to make sure you have in place as well. So we're going to be very proactive on visiting sooner than later. Now that segues into the Medicare, discussion. A lot you don't really, unless you have a disability or a special circumstance, you're probably going to have the opportunity for Medicare at age 65. Can that change in the future? Absolutely. I have no idea how that's going to look. However, 65 is going to be your eligibility opportunity for Medicare. So age 62, age 65, if you are age 60 or around there, or even closing in on 65, or you're over 65 and still working, we will help you with a Social Security analysis if need be, and also see how that correlates and aligns with your retirement. It aligns with your current benefits that you might already be on. There's a lot of moving parts, and we're in a stage in our insurance industry, specifically health insurance, where a lot of that overlaps. And if you don't have a specialized agent or agency that is familiar with Social Security, or a registered Social Security analyst like what we are, as well as being well versed on the Medicare, individual health insurance, the employee benefits, make sure you've got somebody that knows all aspects of that, because it's paying big dividends for us right now. We're able to help a lot of people navigate solutions for their health insurance or their future insurance, and help them prepare. And that gives them peace of mind, and it's been pretty helpful for our clients. Back to the article, turning 62 in 2026, what you must know before you claim. So this had some pretty good insight here. One of the biggest financial decisions a retiree faces is when they claim Social Security. For those turning 62 this year in 2026, the stakes are higher than ever. We're going to walk you through some real numbers and a few trade offs, how it relates to turning 62 in 2026. The first is the full retirement age is age 67 for anyone born in 1960 or later. Okay. So filing at age 62 means a permanent 30% reduction. So if you are looking to say, "Hey, it's my money, I want to start accessing it," no problem. Just know that you're forfeiting, in most cases, or almost always the case, 30% of what you could be getting in that distribution. Now, that could be 30% of a small amount, or it could be 30% of a larger amount. So it just depends. And that's why an analysis is very important, to do a complete review. Maximum 2026 monthly benefits are going to be $2,969 at age 62, $4,152 at age 67, or if you take that a step further for 3 more years at age 70, you're going to get a $5,181 benefit, a gap of over $1,100 per month between age 62 and age 70. So when we do a Social Security analysis, we basically heat map everything out. for you yourself or you and a spouse, and line up what basically a heat map on where that would benefit you most and what money you could be leaving on the table. But that's a pretty powerful bullet point here on the review is the maximum monthly benefits if you go in at 62, 65, or 67. This is a case by case basis. This is just not a blanket, assessment. So that's why, if you need assistance, reach out to us at Palmetto Life Group, 857-877-357-5316 is the office line number for that, as well as visiting us online at palmettolifegroup.com. Couple more things we want to talk about on turning 62 in 2026. Research shows that 90% of the workers between age 45 and 62 should wait until 70, yet 29% still claim at the earliest possible age. Let's repeat that. Research shows that 90% of workers between the age of 45 to 62 should wait until age 70, yet 29% still claim at the earliest possible age. Again, those are just some stats there. It's a case by case basis that we can help you out on the review. We'll take a look at what's called an earnings test. In an earning test, if you claim, for before your full retirement age of age 67 in most cases, and you earn over $24,480, Social Security withholds $1 for every $2 earned above the limit. Okay. So this is important. If your full retirement age, if you can hold on until then and you're continue or plan to continue working, this is something that you can leverage. Again, it's going to be different for individuals. You might need that additional benefit or that income. I get it. But just know there's exposure there on $1 to $2 earned above the limit. And that limit again is $24,480. Social Security Fairness Act. This was signed in 2025. The good news is for teachers, firefighters, police, and federal workers, the windfall elimination provision. I'm not expecting y'all to know this, but it's an aspect or something to consider in your Social Security. The windfall elimination provision and government pension offset were eliminated. I'll give you a quick example. We had a client, actually, this was last year, early last year, around January, had a Medicare client said, "Hey, listen, I think this legislation on the Social Security is going to affect me and possibly in a good way." I was like, "Hey, you know what? We're just now doing our Social Security analysis. We're getting this tool set up. Let's take a look at what it looks like." And sure enough, this client, an individual, once we did the assessment, there was an additional like $15,000 a year that they could get on their Social Security benefit. It's a lot of money, especially if you compound that over the years that he's going to have access to it. So, very important regarding the Fairness Act signed in 2025 is teachers, firefighters, police, and federal workers. That windfall elimination provision, basically, that pension offset was eliminated. And I saw that firsthand in a review with a client on how significant that can possibly be for your so called bottom line of your retirement and the access to the money that's due to you. Practical advice: check your earnings record at SSA.gov. Use the free calculators and coordinate spousal benefits strategically. So you can go to SSA.gov. We have our clients, we help them set up accounts. A lot of times we guide them. We can't do it for them, but we can give them insight on how they can get lined up on that account. And there's some free calculators there. However, I'm not saying they're not accurate, but I don't think they go into as much detail as they possibly could. That's where us as registered Social Security analysts can actually size that up and see what that calculation would look like for yourself, spouse, one or the other, or both. So you want to be strategic in coordinating your Social Security benefits. This is a great article to basically, you know, see if patience will pay off. If you're especially if you're working, you might not want to take on that Social Security benefit at age 62. You might want to prolong that a little bit. And the analysis that we can do for you is absolutely going to be able to help you out with that. So great insight, great article. I'm glad we came across that, and hopefully we can visit with you and talk about the Social Security options. If you're, 60 and higher, and as far as age, we're going to be here to help you out. That's going to segue me into Palmetto Life Group again. Let's talk about Palmetto Life Group. Palmetto Life Group is our local agency here that basically focuses on life insurance, long-term care planning, the Social Security analysis as it relates to your Medicare and your retirement, as well as taking a look at maybe an umbrella policy you might need to have for yourself and protection. Your auto, personal lines of auto and home insurance. We're going to be here to help you out with a review for that. And it could be commercial lines. Maybe you need some liability insurance or you have it in place. A lot of listeners are hearing me online are like, Justin, I just haven't shopped this in a while. It's kind of a pain, but can you help us size this up and take a look at it? Absolutely. And even if now's not the right time to look at that, reach out to us and we'll schedule a time later this year, next year, or when the renewal comes up. I'm playing the long game. Been playing that for a few years now, almost 14, I think, is when I got into the industry and business. And I think we're going to help you provide some value. We want to take a look and size that up with Palmetto Life Group. But remember, life insurance, long term care planning, which I think is critical right now. I was in a workshop all day yesterday, and a great speaker that was at the event really drove home the long term care situation that we're going to face here in the United States. And I don't think we are nowhere near to being prepared for that. And even a few days ago, I saw a video regarding long term care and like what's going on in Japan, and it was pretty dark. And if you've never had to deal with a long-term care situation with a loved one, you need to get prepared. You need to buckle up. You need to be make sure you've got a plan of action, and we'll be here to help you look at those options. But Palmetto Life Group's phone number is going to be 877-357-5316, or visit us online at palmettolifegroup.com. So let's keep on going on some of these articles and details that I wanted to bring up for the show. We just talked about Social Security and how it relates to turning 62 in the year of 2026, where we're at right now. Another article on regarding Medicare is an alert I came across, and this was sourced through Ritter Insurance Marketing. Really like what they give out there. We're not aligned with them, but they provide some great value and insight online, and they brought up a reminder, an article regarding urgent 1.3 million Medicare cards being reissued. What clients need to do now. This is a big deal because this is going to possibly disrupt Medicare insurance or plans that are coordinating benefits for the Medicare beneficiary. And not to go into a complete Medicare review, but you've got Medicare A and B, okay, and you have that red, white, and blue card. Those cards get lost. Sometimes they get updated. And this was an alert that 1.3 million cards are being reissued. So, a major time sensitive Medicare update that every agent and beneficiary needs to hear or address. CMS processed 1.3 million Medicare beneficiary identification or identifier numbers as a reassignment, and they call it MBI, Medicare Beneficiary Identifier Number. That's that alphanumeric number that you have on your Medicare card. All claims and eligibility and billing. So you absolutely want to make sure, you keep an eye out for your mail, or if you got a new card that you let your insurance company know about that. Why the change? Likely tied to a data breach involving claims processing vendors. CMS has not officially confirmed the reason. So, bottom line is just CMS that manages and oversees Medicare said, "Hey, there's 1.3 million people. It's a lot of people are going to need to make sure they be on the lookout for a new card." New cards went out in March, so that could have been sent to you last month, or maybe is sitting in your mailbox right now or on your tabletop that you haven't opened up yet. for whatever reason. The new MBI is active as of April 14th. So that was a few days ago. Old numbers are now deactivated. So if you've got a deactivated Medicare number, you need to make sure that you have the new one to be able to provide your current insurance plan that possibly complements your Medicare coverage. What affected beneficiaries must do: destroy the old card, give the new MBI number to doctors and pharmacies and insurers. Just brought that up a minute ago. Benefits, premiums, and plan coverage are not changing, only the ID number. So, again, it's not going to disrupt your plan or coverage. You just got to make sure that you update your insurer that's providing the additional coverage to you. So, fraud warning: Medicare will never call you asking for payment or issue of a new card. Hang up on anyone who does. There is a lot of noise out there. There's a lot of fraud going on in the health insurance industry. Medicare, the Affordable Care Act for those that are under 65, man, it's been exhausting to how to keep up with it. I can't tell you how many times I will do an annual review. By the way, we do annual reviews for our clients. Sometimes those are very quick, sometimes they take a little bit longer. Sometimes the client just doesn't want an annual review, which we don't recommend, but that annual review will help us assess your plan. Where I'm going with this down this rabbit hole is I will do an annual review and find out that one of my trusted clients or valued clients actually enrolled with somebody on another plan that they shouldn't have been aligned with. Okay, they just got a phone call. They told them they're going to get this, this, and that, and they signed up for that plan. And possibly, and a lot of times, they have exposure because of that, and they just didn't realize. Got some very smooth people on these phone calls, and they are basically converting um, the Medicare beneficiaries to another plan. You might be listening to that, say, Justin, that's actually happened to me. Let us know, and we'll help you do an assessment. And just know you want to visit with your agent once a year. Okay. Sometimes you got to visit with us throughout the year because medication changes, a diagnosis comes up, and we want to assess that and see if there's a reason to change, or even if you have the opportunity to change or make some modifications. So that's important. Agents need to watch out for the enrollment denials and claim rejections caused by the state MBI numbers. So this is why it's important to know if your Medicare ID number has changed or identifying number has changed, because it could cause a reduction in some claims that come up. So reach out proactively to your carrier if you can. If you need some guidance on that, reach out to us at Texas State Insurance Services. Remember, Texas State Insurance Services is our agency that focuses on individual health insurance, Medicare insurance, as well as employee benefits. That phone number is 210-880-5316 or txstateinsurance.com. Google us at Texas State Insurance Services, and we can help guide you on what you need to do to be proactive to update your insurance carrier on if your Medicare identification number or identifier number has changed. So, really important article that came up regarding Medicare, and I'm glad that we've got that addressed on the show today. So, let's keep on talking about what I've come up with online. Um, the health insurance sinkhole: real families, real consequences. That is the headline on an article that I found on Yahoo Finance. It was by Terry Savage, the Tribune contact agency. And this was actually posted on April 11th of this year. So last week or a few days ago. And basically, it's a financial columnist, Terry Savage, that's sounding the alarm on a widely read April 2026 piece: the expiration of enhanced ACA subsidies at the end of 2025 is creating a genuine healthcare crisis for middle income Americans. So I'm going to break down this crisis that I've been kind of trying to raise the alarm bell on for months now, that we knew was coming this past fall going into this year of 2026. So, just as a reminder, if you're on an individual health insurance plan, I'm talking under 65 in most cases, Affordable Care Act, Marketplace, Obamacare, whatever you want to call it, there's a lot of people that are on those plans. And we had a lot of listeners and clients that were receiving expanded subsidies that ended on the end of December 31st, going into the new year, and just totally annihilated the affordability of insurance plans for them or their family. So that was a part of the American Rescue Plan and Inflation Reduction Act that expired December 31st. Congress could not agree to extend this. Now, I was really disappointed. I thought we would see an extension on this because I saw this hurting families significantly. Now, remember, there's still incentives. If you make a specific income bracket for your family, and depending on your household size and tax dependence, there is absolutely savings still out there to bring the premiums lower. But it was like that middle class, that middle segment of the income bracket that just got totally destroyed because they got a taste of affordable insurance or reasonable insurance, I guess. I don't know if it was still affordable, but totally rocked them to where they couldn't afford it. Okay. Or maybe they're currently on a plan and they're fixing to get off the plan. But the real story for one family of five that they bring up in this article, they saw their premiums jump from $800 a month, had plenty of clients like that, to $2,000 a month. And they simply dropped the coverage entirely. I get it. You've got these increases in the health insurance that were significant. The income cap to qualify for an ACA subsidy, 132,000 for a family of four. Anybody above that gets no help. Okay, um, $132,000, like, man, that should go away a long way with the family. Well, if it's just one income earner that's able to produce that, or maybe a husband and wife that are collectively having to earn that, they still have taxes to pay. Yeah, they've got some dependents, but just gas alone, the fuel costs, obviously, that, for commuting or taking care of kids and getting them to where they need to be, as well as food, you know, that is huge to overcome when you're expected to spend $2,000 a month on a health insurance premium. It just doesn't add up. And hopefully, our legislatures are working on this. They've been really quiet on it. And I think it hurts a lot for many people, but I don't know if it hurts enough to where people are just going to basically say, hey, I'm going to vote based off of this. And that's a whole nother conversation that I'll go down possibly to wrap up the show. But I was looking at some stats, and a lot of people are going to base their voting on where they are in their health insurance costs. Okay. And I think that's going to be important for legislatures that are looking to get into office to address and follow through with if they get elected. But even members of Congress are feeling it. Their salaries of 174,000 put them over the subsidy threshold. So, the members of Congress, they have access to insurance themselves, and they might have a family that needs additional insurance. Now, remember, the Affordable Care Act individual plans, the more family members you stack up, the more that premium goes up. Okay. If you're on a group plan, a lot of times there's a cutoff at employee children or employee family, just in case you've got a large family or a handful of children on that plan, and you can actually come out winning on that. I say that maybe not necessarily as much as you'd like, but for those families in that 132,000 or 174,000, they might be that what they could have had access to prior was affordable insurance for the rest of the family, and that went away. We saw that quite a bit. Healthcare in this article they bring up 17.6% of the United States GDP in 2023. The financial ripple effect of mass uninsurance touches everyone. So again, healthcare was at 17.6% of the United States GDP, almost 20%. Rising unprecedented care, hospital strain, higher costs for the insured, wage garnishments, and bankruptcies for those that go without coverage. The luncheon, or actually the all day training I was in yesterday, one of the other speakers had brought up how healthcare expenses or having a medical emergency come up is the biggest lead to bankruptcies for most Americans. I get it. You know, if you don't have coverage in place or health insurance in place, you have tremendous exposure if you get that bad news medically, or God forbid there's an accident or a serious injury or a chronic condition that comes up. You want to make sure you're protected with that. So, more than anything, we just want to get a message out that there are alternatives out there, not for everybody, but for a lot of people, we've got some alternatives for more affordable insurance. There are some short term options out there as well that can maybe bridge the gap if you're in between coverage, possibly, getting into a new job or employment. And then there's health sharing plans. We've got a few of them that we're liking right now that you'll have some exclusions though. There's some basically some knockout questions medically. And I'll tell you, a lot of people get frustrated with this. They think they're healthy. They're not necessarily as healthy as they think. And listen, I'm one of those individuals. I'm healthy. No, you've got some ailments that you could possibly have that hinder you from getting health coverage or a lower cost insurance plan. One thing that I'll add to this discussion that we're talking about regarding the health insurance sinkhole for this article is a lot of individuals are needing to get a PPO network, a true health insurance PPO network plan. And more than ever, we've been helping people get that. The trade-off is the cost, okay? And in most cases, that cost is overshadowed by the fact that you can get the coverage and care in the facilities that you want. So if that's something you absolutely need, or maybe you want to offer to your valued employees or take an assessment, a lot of individuals we had to close out a handful of group health insurance plans over the past few years, and we're bringing that back to the table again. The Affordable Care Act plans are just not as affordable as they used to be for the employees. And we are actually just had a dental and orthodontics office that we revisited that with, and we're analyzing. Hey, do we bring back a health insurance plan that's a group plan that can also benefit the employees and be more reasonable on cost? Because it was just getting to a spot where individual coverage was going to be less expensive than the group. And we're kind of seeing that. It's a case by case basis off of that. But let us know if you're listening or watching us online if you need some help with that. So, bottom line is, if you or someone is struggling with health insurance costs right now, give us a call at Texas State Insurance Services. 210-880-5316 is our direct office line number, or visit us online at txstateinsurance.com. As a reminder, you are listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland. This is episode 27. We probably should have a few more episodes than 27 by now since we started the show last year. However, we get busy. Sometimes we'd have to do a recording. It was a holiday. But we're so excited that you're here listening to us online or over the radio. And just a reminder of the show, if you're just tuning in, it's a show about everything insurance. A lot of times I'll specifically go over, like in today's case, important articles and details about specifically health insurance today on what you need to keep in mind on. I mean, not even health insurance. I talked about Social Security a little while ago. That ties into your health insurance and your retirement. So just hopefully, we're providing some value, and you listen to me yapping here for about 56 minutes, but we're so glad that you joined us, and we're going to keep on going over some articles here with the Mad Insurance Show. And then I'll give you details about our agencies that you can reach out to us at here shortly. So another article that I came across was ACA enrollments are down over 1 million. Now, I've brought this up a few times, but this is an article that came out of Insurance News Net, as well as relayed on CNN and the Kaiser Foundation, as well as CBS News. And it begs repeating. The federal CMS data confirms that many expected ACA marketplace enrollments for 2026 are dropping or plan to drop, which is at over 1.2 million people, the first decline since 2020. but the full picture may be worse, and it's still unfolding. We're watching this real time. I keep on telling customers and individuals out here that we try to help. The health insurance industry is a dumpster fire right now, and it is smoking. And that goes for individual marketplace plans, like I'm going to talk about in this article, or Medicare situations and changes there, and as well as group insurance. Okay, last week I think I brought up the significant claims that self-funded plans, employer-sponsored self-funded plans are hitting. And it's record numbers on catastrophic claims. But let's keep on diving into this article on the fact that over 1.2 million people are dropping coverage, and that's going to increase. So the stats 2025, there was 24.2 million people enrolled in affordable insurance plans or the Affordable Care Act. In 2026, it went down to 23 million selected plans, a drop of approximately 1.2 million. Now, there could have been people that just auto enrolled or just enrolled with their agent passively, and they are planning to come off the plan once they finally figure out that it's not a affordable option. New enrollees were down 14% year over year. That's the sharpest drop, being in North Carolina. They had a 22% drop, and Ohio had another 20% drop. But, collectively, it was almost 15% year over year of people dropping their health insurance. That's alarming. The Kaiser Foundation estimates average premium payments rose 114% for subsidized enrollees who stayed on the same plans. So just keeping the same plan and trying to stick with that for another year, they got a 114% increase on average. That that's unsustainable. Okay, and that's a problem. The 90-day grace period for premium payment means you won't know the true effectuated enrollment until mid 2026. We're basically there. The numbers could fall further. So I am anticipating us getting an update in the coming months on that 1.2 million people. Uh, I wouldn't be surprised if that doubles, or more. The CBO projects up to 2.2 million to 4 million people will ultimately lose insurance in 2026. So I said minimum double. That's what we're looking at. I was a little ahead of myself on the bullet points here for the article because of not having the subsidy extension. We're going to see that 1.2 million people that dropped out or just eliminated their coverage to get to 2.2 to 4 million people. When you get those type of numbers out of the system, within the health insurance, and again, there's a lot of people that were probably on coverage that shouldn't have been, but not millions, unless I'm totally off. But that's going to affect the risk pool collectively for what these plans and the exposure that the health insurance companies could have. Florida has an angle on this, and the Palm Beach Post reporting shows Florida families facing dramatic bill increases. So, you've got pockets of areas around the country where they're really trying to address it and get awareness on that. Florida, it was one of them. There was a PDM update, periodic data matching, through CMS, which is basically matching the process. This is important to bring up. I actually saw this in a separate article. Is that the Affordable Care Act is trying to say, hey, if your children are eligible on Medicaid or should get Medicaid or maybe the CHIPS program, you should have them on that. And a lot of, I mean, I'll have many clients over the years that say, hey, we don't want CHIP or Medicaid for our children. We want to be on the individual health insurance plan. Well, a lot of times you don't have a choice, and that could affect your tax credit or your lower cost coverage collectively for your family. So you want to make sure you look at that, because they only give you like a 30-day window to finalize or resolve any issues on where the coordination of coverage should be. So that's important to know. But that ACA enrollment down over 1 million, no question, we see that doubling, if not quadrupling, over the end of the summer. So that's a sobering situation that we're seeing. And all we can do is provide alternatives and solutions for other affordable coverage options. And that's what we're here for. Remember, you can reach out to us at Texas State Insurance Services. Our phone number is going to be 210-880-5316, or you can visit us online at txstateinsurance.com or Google Justin Holland at Texas State Insurance Services. And we'd love to help you out and see what we can do to help you with more affordable options or anything else that we've discussed on the show here today. So, couple more articles, industry trends. Man, it's smoking today. We've got plenty to talk about. Medicare Advantage is getting real. What normalization means for you. So this is more of an industry trend situation that I want to talk about and bring up on this article, specifically to Medicare, and that's the fact that CMS is shifting Medicare Advantage away from flashy extras towards substantial, quality-focused care. Okay, clients are going to start shopping plans and hopefully utilizing agents to navigate that changing landscape. We want to be that agency that you want to utilize for your Medicare reviews if you need it. But the bottom line of this article, and we saw this going into 2020 specifically, is there were big food card opportunities out there where you could utilize a benefit within your Medicare Advantage plan to purchase food. Significant dental plans. I think there were some plans that had like $20,000 in dental coverage. I mean, that is incredible, and how is that sustainable, right? Um, Generous give back perks and winding down that with CMS is trying to drive down the cost of the insurance. A lot of individuals would switch a lot of times a good Medicare plan to go to another plan for another benefit. I'll tell you, and it can kind of get exhausting. We will have clients that, hey, Justin, I was told that there's a give back program that I can get some of my Medicare Part B back, in a credit. And I'm like, yeah, absolutely. We can absolutely take a look at that. And a lot of times I ask them, hey, let's do a review. We are a agency brokerage where we can basically shop all the carriers out there. Sometimes the carriers don't give us that option to offer it to you, but most of the time they do for now, for the time being. And we will do an analysis and we're like, okay, this plan will absolutely give you this benefit that you were asking about, but you're going to lose this benefit, or this benefit's going to lower, or you're going to have a higher out of pocket catastrophic maximum limit. God forbid something comes up. And when you do these analyses and reviews, you realize that just because you're getting this doesn't mean everything else stays the same. And that's typically the case for most Medicare Advantage plans. So where we're going to go into this article is the focus is going to be shifting on provider access, drug coverage, and sustainable benefits. We're going to get down to the basics in Medicare Advantage. So you're probably not going to see as robust plan offerings and all these, nice shiny objects that come out on the carrier options. Now, some carriers could be in a position to continue offering those. But based on what we're seeing in this trend in these articles, I have a feeling we're going to see some significant changes in the Medicare landscape, and it's going to be specific to areas. Medicare Advantage is very prominent in the San Antonio and South Texas area. That might not be the case in Dallas or Houston or Austin or other markets around the country. But CMS is removing 11 administrative measures, adding heavier emphasis on clinical performance. So CMS grades these Medicare plans that millions of people are enrolled in, and they're updating and removing some of the measures that were initially in place. CMS does not want to move forward with a new special enrollment period for provider terminations as well. Fewer mid-year escape hatches for clients. Let's dive into that. Although I like the fact that CMS is trying to make some changes that's specifically going to hopefully help the insureds, the clients. But there was a lot of disruption this past year where some of the information online was inaccurate. Maybe you got on a plan thinking one doctor was on it and they're no longer on it, or they terminated their contract. We were anticipating CMS saying, hey, you know what? If that's the case, for provider termination for whatever reason, we'll allow you to get into another plan. They're not doing that. So you'll just have to find a doctor that's in the plan, or have to wait until your annual enrollment period in some cases, or most cases, for a plan change going into 2027. Now, there are some conditions and situations for special enrollments that are still out there that you might want to consider. However, if it was based on just the termination of a provider, it's not going to happen. Carriers are eliminating the unlinked chart reviews that initiated the risk scores, meaning plan design and commission structures may shift. So that's going to affect plan design specifically for you, the consumer that's on a Medicare plan. It's also going to affect the compensation for us agencies and brokerages out there that are helping you shop it. I will tell you right now, we are in a position, and it's kind of scary. A lot of these carriers are no longer compensating us as agent brokers for some of the plans that we enroll our clients into. I can pull up right now a spreadsheet of probably four or 500 clients that I enrolled in a specific plan that we don't make any money on. And that plan is typically the best plan for them. So we want to be ethical. Let's put it that way. And it's just kind of a lost leader there. Now, in our defense, or to help us, we're trying to counter that by offering other products and services. And a lot of clients will say, "Hey, Justin, you're going to charge me a fee for doing a review?" No, we're not. We're not there yet, and we don't want to if at all possible. It's actually detailed in the Medicare guidelines and health insurance guidelines is you can't, on individual coverage. So all we ask is, hey, keep us in line for, other friends and family that might need help with additional insurance services. That's why we've got Palmetto Life Group. Texas State Insurance Services is just going to focus on individual health insurance, Medicare, employee benefits, as well as other insurance options relating to dental and travel and vision, stuff like that. But Palmetto Life Group allows us to help you with your life insurance, your long term care planning. I've got some clients that just reached out to me, and I'm going to talk to them this afternoon. They're like, hey, we need long term care insurance, possibly, or coverage. And unfortunately, both of them are not in the best health, but because they've got some retirement plans that we can utilize, we could actually get them a long-term care benefit without medical underwriting. Okay, some assistance there. So we've got some tools to be able to help individuals out with other aspects of the market. So kind of went on a tangent there. The bottom line for this article is a plan with fewer perks but better provider access is going to be really what we focus on or see from Medicare going on in the future. So those give back programs, those discount cards for all kinds of stuff, food, over the counter items, gym memberships. I have no idea what's going to get cut or not get cut, but just expect some changes. I think this fall, and I said this last year, probably this fall will be more pivotal than the prior years going into 2027, and you want to be proactive on your insurance. And that's not just for Medicare, that's for your individual health insurance if you're under 65, or your coverage that you have in place, or no coverage that you might have in place that you need to consider having in line, or your employee benefits plan. Okay. And we'll help you do a review. We'll size that up with individual Medicare situations. I mean, just this morning, I was helping out a client with a 9 o'clock phone call on the dot with the Social Security office. So we could help them. They actually got enrolled in Medicare Part B by mistake, enrolling into their Social Security. And because we try to be proactive in that, we've got a direct line into Social Security to where we can help them address that and not have to spend an hour, 2 or 3 hours online or over the phone with the Social Security office. So I think they were pleased with that call because we were able to knock that out like in 15 minutes and got the information we needed. They're going to drop off some details to the local office. And instead of trying to fax that in or send it by email, drop it off in person. If you need assistance on some of the, I guess, tricks and tips as far as engaging your Social Security or your Medicare, because a lot of that correlates together, along with if you're continue working and have access to benefits there or continue earning, let us know. We'd love to visit with you. And that division that would help out on the Social Security side is going to be Palmetto Life Group. Palmetto Life Group's phone number is 877 357 5316, or you can visit us at palmettolifegroup.com. You can always visit with us at Texas State Insurance Services as well. Uh, we're in the same office in multiple locations around San Antonio, as well as an office that we have in the Rio Grande Valley out of McAllen. So we service that area very well, and we're growing that market and area as well. Let's um, let's wrap up the show. So I'm about 50 minutes in. I can't thank you enough if you've been listening to me yap for this entire time. Hopefully, we're providing some value, some insight on what's going on in the insurance industry, specifically today was health insurance once again, just because there's so much going on and so much noise out there. But some of the takeaways and a recap that I want to bring up as we wrap up the show. And again, it's the Mad Insurance Show, making a difference in insurance. And you're listening here on KTSA over the weekend, or you might be listening or watching this show online on our YouTube channel. And please remember to like and subscribe to our YouTube channel if you have a moment. And you can go to that at youtube.com/ at Mad Insurance Show. We'd love to have you join the 4 or 5 followers that we've got. I kid, it takes a while to build up these presences online and to provide that value, and hopefully you're getting that today. But without further ado, let's do a quick recap of the show. We kicked off the show talking about Social Security timing, and that matters enormously. We informed you to when you want to be informed before you file, okay? In that article, we brought up the fact that if you're turning 62 in 2026, you want to address on drawing that Social Security now or waiting a little bit later. That's where we help you as being a registered Social Security analyst, and there's only a few of us that can help out with that, and that's through our Palmetto Life Group division. Another part of this recap is Medicare. Check whether your Medicare MBI number had changed. Be on the lookout as far as last March when new Medicare ID cards, that's your red, white, and blue card, had been updated and modified, and that could be sitting in the mail with for you right now. Because if yours did change, because for whatever reason CMS had a data breach on that, you want to update your current insurance plan that could be being managed, could be managing your Medicare or complement your Medicare as well. Another thing was that we talked about where health insurance costs have spiked. We've seen a significant increase on the individual health insurance that is affecting people, to either just automatically just disenroll and get out of the plan, or maybe they're finally, 4 months deep into their individual health insurance and they're looking at possibly dropping it now or soon and go without coverage. If that's your situation, then reach out to us at Texas State Insurance Services and we can address that and take a look at that as well. Medicare Advantage is changing. Quality over gimmicks. A lot of people switch plans just because of one benefit or a little shiny object over here, and possibly lost a coverage option that they really value or needed initially. So just make sure you're being proactive on your Medicare. Reach out to your agent if you got one. If you don't, obviously Texas State Insurance Services is here to help you look and prepare and be proactive. I think the timing needs to be way in advance before the annual enrollment period. So just reach out if you've got any questions, or you reach out to us later this year once we see what those changes could be. But you want to be as proactive as possible. Um, I'm going to ask you to give us a call if you've got questions, or maybe I didn't bring up something here in the show that you felt was important or you got a question about. Texas State Insurance Services is going to be for individual health insurance, Medicare, and employee benefits. That phone number there is 210-880-5316, or visit us online at txstateinsurance.com. Or if you had questions, hey, Justin, you didn't really talk about auto, home, and commercial lines of business. Got some questions on that. that's where you're going to reach out to Palmetto Life Group. And that phone number is 877-357-5316, and we will take a look and review all options as far as your life insurance, long-term care planning, social security analysis that relates to your retirement, or the auto, home, and commercial lines. But we're going to wrap up the show. I talked quite a bit. I think we brought up some great articles. I can't thank you enough for listening to us. Remember, this is the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, with Texas State Insurance Services and Palmetto Life Group. And hopefully, we provided some value here today on the show. And we'll hopefully have some guests. I know we've got some guests already scheduled in the coming weeks, and we'll have them join us. And again, continue that value with the Mad Insurance Show. Thank you, everybody, for listening, and we'll see you again next week. Take care, everybody.